Hey everyone, it's Zach back with a new mortgage video. If this is your first time seeing one of my videos, welcome to my channel where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So in terms of news impacting rates this week, the big headline was the Fed on Wednesday announcing a quarter-point rate hike. Now, this was completely expected and had been for a little while. However, yesterday, mortgage rates got a lot worse, and there was no real additional news to suggest why. I mentioned in my last video that Jerome Powell, the president of the Fed, his comments could potentially swing things one way or another, but he was pretty down the line in his comments. Nothing really suggesting anything one way or the other about them doing another hike or continuing to pause. So that was a little unexpected. That certainly does happen occasionally where there's not really a whole lot of economic and data to support the market moving one way, and typically that will lead to a correction. And today it has a little bit. We haven't seen a complete improvement to offset the losses from yesterday, but we've seen some improvements. We also got the PCE report, which is the Fed's preferred method of evaluating inflation. That came in about as expected. So it's also possible that the worsening in rates yesterday was some people in the bond market, the mortgage-backed security market, thinking that PCE was going to come in hotter than expected, maybe having some insider information. But at any rate, there is really no reason still to suggest why we saw the worsening in rates that happened yesterday. So as far as next week, there's not a whole lot of big market moving events like there was this week. We've got the initial jobless claims report on Thursday. We've got ADP employment, that's jobs created, on Wednesday. The only reason I mentioned that is because the last time we saw that ADP report, it came in way higher than expected, almost 500,000 created versus an expectation of around 200,000, and that affected mortgage rates. So if that happens again, in either case, on really any of these important job-related metrics, if it comes in way hotter than expected, that would be bad for mortgage rates, or if it comes in a lot lower than expected, that might help mortgage rates. But in general, I would expect, barring any kind of significant economic moves, continuing to regress back to the mean that we've seen already today, and relatively little movement next week. But I'll be back toward the end of next week in any case to break down what happened. But thanks for tuning in as always, and I'll see you next time.